Good morning, everyone. This is Brad Matheny. I wanted to highlight some of my research related to what the markets are going to be doing over the next 6 to 12 plus months. Now, in part of my research, I start looking at where money is going. I call it capital shift. Capital shift is where institutional and smart money is actually moving. And what happens is, in the environment of trading, you see things like technology will take off during the AI bubble, or like we saw during the dot com, or after the bottom of the global financial crisis. You had a resurgence in some of the technology stocks and some of the other stocks that took place, and that resurgence lasted about 2 years, and then we had a shift. And what happened with the shift is that when capital starts to become overweighted, let's say, in a particular sector, and or that sector experiences dramatic growth beyond normal bounds in some cases, then a portion of the capital that's applied into these sectors, let's use technology right now, for example, Nvidia or Google or Apple or whatever, and you start to realize that, you know what, a lot of these holders have got 50, 60, 80% gains, maybe more, maybe 300% gains in some of their stock. Now, they're not going to dump all of it, but they will potentially dump a portion of it, maybe 20, 30, 40%, leaving the rest out there and taking that fresh new profit into a cash account, selling it out, turning it into liquid assets. And then they start looking for what are called undervalued or ignored sectors. And I've been talking to my subscribers about this now for about 3.5, 4 months, telling everyone that, be prepared. The markets are going to shift before the election into what I called perceived opportunity. What we have in that moment is that right now, a host of people, traders, institutional, large, small, hedge funds, what have you, are accumulating undervalued sectors, ignored sectors, like this ARKK innovation ETF. This is why I'm highlighting it. You have, and you can see here, the base that's set up in 2023, no real momentum, a little momentum here, consolidating very tightly into this range. And I'm going to highlight the fact that we are above support. We continue to move up into a channel. Let me get rid of these lines. We move up into this purple channel, and you can see right here, we're down here near these lows. This gives us an excellent, let me do this, gives us an excellent low risk environment right now. You can see that anything down near this area gives us a very low risk environment for entry. I mean, it's just rock solid as far as risk. Your risk in this trade would theoretically be about nine, maybe 9, 10%. But understand that that is a very solid low risk entry for what could become, again, up into this area, an 88, 89% rally, or up into this area, a 65% rally, or beyond, up in the 110, 120, 130% rally. Now, why do I believe that money is going to be looking at innovation? Okay, we've got a big tech rally. Okay, we've got AI as coming as the next software industry advancement, huge advancements in AI. What I think is going to happen next is that is going to translate into tech pouring money into AI and pouring money into AI based solutions. Solutions are going to come in the form of robotics, or it's going to come in the form of improved energy creation through solar or through new technology, fusion, what have you. It's going to come in the form of new medical devices. It's going to come in the form of just like we saw, if you guys have been around long enough, like me, you remember in the 80s, we had all these new computers come out, these PCs, the 8088 processor, and then the 80286. Remember the 286? Then the 386, then the 486. Remember that movement through the 80s and early 90s where we were making strong advancements in technology and hardware and devices? Then all of a sudden, we had not only the hardware and the hard drives were getting bigger and more capable. But then we started getting bigger and more capable software applications and accessories. We started getting scanners and multifunction printers and more devices that we can do, greater capacity in software editing for images and for accounting and for networking. And before you knew it, we went into a boom phase. And that was the 1990s, the dot-com bubble. Well, here we are again, guys. We've had a big advancement in technology companies with AI. We are already on the cusp of huge energy capacity. And I think we're going to be looking at a big wave moving higher, and a lot of these undervalued and innovation robotics and let's just call them ignored sectors over the last couple of years. You can see here, I mean, you can see how this was a high flyer back in 2020 after COVID. But in reality, folks, you can see that we had the movement here through kind of an innovative cycle phase, and then we stalled, and then COVID collapsed and everybody piled into it, and then everybody ditched it. We came back down here and we supported it, and look, right now we're currently below the 2018 highs. And if we just take a simple measure, let's just go from here to here. Okay, I'll try to move it like this. That's 158% gain. Okay, now if we take that same move and apply it to this move here, now, granted, it's no longer 158% gain, it's an 81% gain based on this channeling cycle. If we take it from where we're at right now, it's a 768% gain. And I want you to be aware that this is a very strong likelihood, in my opinion. And I believe these low cycle formations provide a huge opportunity for traders. Now, not all of the ARK funds are like this. Okay, the ARKK fund has this very solid, unique setup with a very big upward potential. I mean, it's trading at 43, 40, roughly 43 right now, and capable of moving to 80 to 100 fairly quickly. But let's go ARKW. Again, same type of setup, upward channeling. You can see here, upward channeling. You try to come across here, set this back down to 2, move this out a little, Control CV, paste this here. Very solid upward channeling. Really a little bit more risk here, but we are flagging sideways. I would not be surprised to see this really come from this area, setting up kind of a rolling formation, maybe a cup and handle and moving higher. Remember, this is weekly, so that's kind of off. So coming into something like this and moving higher. But we're really looking at, I think, a move into 2025 carrying quite a bit higher. And again, this is a very good opportunity for a 40, 50, 60% upward move here, 70 possibly, maybe even higher. We have really strong opportunity here. Now, obviously, be cautious of a potential pullback here into the end of the year. There is a likelihood we could be back in the $70 area in September, October, right before the election. But I really believe these are very strong opportunities right now, especially in this upward cycle channel. ARKQ, technology and robotics. You can see I highlighted this for my subscribers. Very solid flagging. I mean, really, really outstanding. A, B, C, D, E, looking like a big breakout move is about ready to take place. I think this is a very solid move, and I think you can look at easily a move up into this area, 32%, $17, $18 move, and possibly up into this area. Now, this robotics play could carry some weight. Okay. If we move into a period where robotics becomes the next big component of the AI and technology boom, this could, I mean, this could really rally 200, 250%. And particularly even robotics companies like Tesla and maybe even Apple and others are getting into this range where robotics becomes the next big component of the technology boom for, let's call it, the mid century in 2020. So be aware, these are incredible opportunities. Let's take a look at the emerging markets. So this is the emerging markets sector. And you can see I've been highlighting these areas to my followers. Remember, all of these are weekly charts. We do have this flagging formation. We've kind of broken through it. We're in this upward channel. We're near the midpoint of this upward channel. Like I said, you do have a potential for a bit of a roll before we start to move. But again, it's really coming down to, this channel staying intact and this middle channel acting as a support level. So here you have, buying opportunity down here near these lower channel ranges. We're in a bit of a sideways consolidation, slightly flagging A, B, C. We got one more down move, folks. Here, maybe the next week or two, we'll see this slide down a little bit. But again, ultimately, you have a potential for a 20 to possibly up in this area, 30% upward move. And we're just now moving into a very clean breakaway channel to the upside. So things could accelerate very, very quickly to the upside. I want to urge you before this video ends to pay attention to the undervalued and ignored sectors. Okay. There's a ton of them. General Motors, Ford, Lowe's, entertainment groups like Fox. I mean, you can go through and you can do a Yahoo search or a Trading View search for, low price, undervalued, stocks that are still earning money. And I think you're going to be able to find dozens of them. I mean, I have lists of them for my subscribers on my website. But I think you're going to find this is the next big move over the next 16 to 24 months. I think this is going to be where real money is going to be made. Just park it over here, let it set for about 16 to 24 plus months. And I think you're going to see 40, 50, 60% gains easy in some of these stocks. Okay, guys, talk to you later.